Good afternoon, everybody. We have a pretty darn exciting day to talk about today in the financial markets. Lots of activity, lots of wild swings, and as I see here in the chat, thanks to a couple major names, Meta and Microsoft, saving the day at the end. But actually, I guess we could look at that core PCE number and say that really saved the day, because that GDP number, absolutely horrible. So we'll start there. Again, sorry I missed yesterday's show. My microphone seemed a little bit hot. Let me tune that down just a hair. I always try to come up with a name for each show, and I'm trying to make it unique and specific, but I'm getting kind of worn out because I've done so many darn shows. You look at this as my 1,114th show of coming up with a new title for the day. I just put the markets mixed data because I'm looking at it going, great, I've got some good news and I've got some bad news, the thing we never want to hear when we go to the doctor's office. And I'll start things off with the good news. Well, actually, no, let's start with the bad. Let's start with the GDP numbers, which were very bad. Now, remember, the Atlanta Fed has said they expected a 2.8% decrease in GDP in Q1, and that had a lot of people really up in arms going, no, it can't happen. The other Fed banks were saying, oh, for now, it's not going to be that bad. So we'll start off with this graphic here, which looks kind of ominous, lots of red, a picture of the United States. Hopefully, AI got that picture right. I noticed the little Russian stars in the background, maybe a little bit ominous. But let me bring up your numbers for today. I got to remove all my filters here, and then we will show you the data for today. So here is today's trading activity. I'll start things off with that GDP number, which again, I'm focusing on to start as being fairly negative. And if you notice here, the previous number was 2.4%. And granted, our 3.3 historical average is where we would like to be. All of a sudden, we came out at a miserable negative 0.3, right? They thought we dropped to 0.2. That's not good. So this happened early on, 1 hour before the equity markets opened, and this started things off on a pretty bad note. It was not looking good. And I'll zoom into the most recent data since the pandemic, really getting rid of the big waves. And you notice that for pretty much a year, we've had decent GDP growth. I know, Cody. I know. I'm aware of that we should watch just watch the charts. But this is the trend is your friend till the bend at the end. And the reason, and this is where Don and I may differ, is Don may be thinking on this is the next day or 2 days or 4 days. When you look at the macroeconomic picture, it can start to set up the grand trends, which could lead to 6 months to a year to 2 years or more. And that is a much bigger trade to be made when you have swing trading and position trading on the line. So yeah, as a shorter term trader, who cares? In Italian, they mo ma chi se ne frega, means who's going to care for the short term. In the longer term, in intermediate for the swing guys, it does make a big world of difference because it starts to paint the tone. Now, the reason that this one's so important is, as we know, Fed has that dual mandate. Dual mandate is full employment and stable pricing, meaning inflation under control. Although I'll be honest, they want to have this number increasing. And this right here is going to start a firestorm with President Trump. If we have GDP growth at negative 0.3%, of course, Trump will pound the table. He'll point the finger, most likely at the Biden administration, which I think he did today, and say, well, it's their fault. I'm just trying to fix it all. I think a large part of this is expectations of the tariffs and implementation of tariffs going forward, and just global uncertainty, which we said at the beginning of the year was going to be a pretty key point for our markets. So not good when you look at this chart and you realize that this is the first time we've dipped below zero as far as GDP economic growth in about a year. It was really back in 2022 is when we dipped below it in April and in July. And here we are with a quarterly reading of negative 0.3. So not good. And that's really the bad stuff to start the day. And when the market started off, let me bring up the chart of the S&P futures here just so we can kind of see what happened on an intraday basis. So you'll see when these numbers hit. Here is the early morning. So if you go to, there's your 6:30 market start right there. And if you go to an hour before that, which is 5:30, that's right here. You can see the markets were already showing some weakness going into that. Then, of course, they had a pretty significant slide into the open, was not looking good. And then, I wonder why this market reversed 30 minutes in the trading session. 30 minutes in the trading day, we got our second major piece of information, which, of course, is why we watch these pieces of information, to know when they're coming and then know that there'll be volatility at those moments in time. So here is your second piece of data that came out. Of course, we're talking about the core PCE price index, which gives us some inflation projections for the United States. There's our wonderful data chart of the U.S. As far as inflation goes, this one was kind of surprising to me. I still don't believe it. Again, I don't believe the data that's being put out there. I think that this is clearly manipulated, but hey, who am I to say? Previous number was 0.5%. And based off this chart pattern, I've had the expectations that this is going to stair step up by 0.1% for month after month after month. And lo and behold, we went 0.1 or 0 to 0.1, 0.2, 0.3, 0.4. And then expectation on my part was we were going to see this go higher. Well, we dipped all the way back down to zero, meaning no inflation on that core PCE price index, which is, from Trump's perspective, great. So with these two pieces of data, at least this one, what this did today is signals the market that Jerome Powell should have a green light to cut rates at the meeting, May 7th? Let me get the exact date there. I want to make sure I get the right number there. I'm pretty sure, Wednesday, May 7th is the next FOMC meeting. So remember, if Jerome Powell is concerned at all about inflationary pressure or concerned about unemployment, that inflationary question has now been shelved. It's been tabled. And the reason is that the core PCE price index number is what the Fed looks at. Now, they will say at the press conference after on Wednesday the 7th, he will say, well, this is 1 point data. We don't want to be rushed to conclusions here and jump to it. But President Trump will be pushing the buttons and forcing, in my opinion, the markets to put pressure on Jerome Powell, not just the president, but the markets in general, putting pressure on Jerome Powell to cut rates at the next meeting. Now, I guess the big question for you and I is, what are those numbers? What's the possibility of a rate cut? So right now we'll go look at what the markets are predicting, at least where traders are putting their money as far as wagering on, are we going to see a certain amount of rate cuts? And here it is. For the upcoming meeting, which is going to happen on the 7th, which is next Wednesday, you'll see here there's a 93% chance that we keep things exactly where they're at. Just almost no chance, 6% chance of a rate cut next week, which is probably the right thing, right? I think that they should wait, sit back a little bit and kind of play it by ear and see. But this is certainly a great sign for the Fed if the argument is your job is to monitor inflation. And hey, if the data keeps coming out like this, then they may be cutting rates here, which I don't think they will, but we'll see. Big Eb says, it makes us wonder how accurate that PCE number was. We'll never know, right? Because that data, as I mentioned before, is manipulated. It's changed. It's cooked. I don't trust it. I don't trust that data at all. I believe that there is absolutely manipulation that goes on with the data. As I've mentioned, I've interviewed people that work for the Bureau of Labor Statistics, and they have verified that, in fact, there are data manipulation, or there is data manipulation done depending on what the political agenda is. So I've learned to not trust that data as it comes out. And to me, that number is just way too steep of a drop in prices. What do we see? What has fallen so significantly in price over the last, let's say, 30 days? Well, I can go out here and I can bring up the crude oil, which everybody points to, and let's go to a daily chart of the crude oil. Now, granted, we've had a significant drop, and I do think that this was a major factor in it since January to where we are right now as of today's close. Crude oil is down roughly 27%. Certainly that's it. Big Eb says energy, and others are pumping in energy here. That's the big piece of it, but I haven't seen my food prices drop that much. I mean, I guess I could go look at some of the base commodity prices, these softs here, and look at things like corn, which have been relatively sideways. Wheat is definitely drifting down. Orange juice, thank goodness, so I can get my bottomless mimosas on the weekends at a cheaper price, but we have been rising for the last month. Granted, it was a much steeper decline back here starting in January, but now we're stabilizing and looking like it's going to move up. Coffee. I don't see coffee declining. I don't see cocoa declining over the past couple months. It's actually rising. You look at things like cotton. Granted, it was down for the tail end of last year and early this year, but now we're back to moving to the upside, higher highs and higher lows. So soybean futures, last couple months or last month, shot up in price. So some things are going down. Certainly not my ribeye, live cattle, still ripping to the upside, and hogs here. So our bacon also very high in prices. So those prices, I don't see drifting down in my grocery store. I don't see that happening. Anyway, that was rejoice from the markets. The markets, knee-jerk reaction, are going to jump on that one. Eggs came down, and ended up causing kind of this market euphoria after that announcement. So 30 minutes of the trading day, we saw a pretty nice move. Let's go there and go back to it, and I will show you your 5 minutes. We can see the intraday, and really right as that announcement came out of our core PCE price index, that's when things really started to take off. Now, it was pretty good for most of the trading session. Higher highs, higher lows. I was busy all day, so I didn't get a chance to make day trades on this one. I'm still holding those positions that I expect to expire Friday. All things going equal, all my options will expire worthless, but we shall see. What do we got here, Scott? Let's consider that we have two power players, Trump and Powell, using the economy to force each other to change their practice. I agree with that, Scott, but I think that the variable's a little bit different. You have Jerome Powell, who is... You ever go to Disneyland and you've got that... There's a car that you drove as a kid. It's really the only car as a child that was legal to drive, right? You got behind the steering wheel and you could, at any age, drive this vehicle. Unbeknownst to you, there's a concrete divider underneath the car in between the wheels that the car can't go over those. And I feel like that's Jerome Powell. He's stuck in this lane where he's got on one side the mandate of full employment. On one side he's got inflation numbers. So he's going to kind of try to balance those out, but he can never really go off the rails. I know I'll get some pushback on that one because there are arguments that he did go off the rails at a certain point. But I don't think he can go so drastically far. Whereas President Trump can go drastically far. And I would argue that some of the things he's doing are pretty dramatic in the scope of creating volatility. Jerome Powell will kind of oscillate back and forth and create some abrupt changes, but nothing that's so catastrophic that the world's just going, oh my God, what in the heck are you doing? Whereas Trump, leaves not only us, but other countries around the world going, what's going on over there? What are you doing, right? That shock factor makes a difference. So I don't know if I would call them equal power players. I think Powell is a bit more focused and staying in his lane and not going to deviate much. I think Trump will bounce around very quickly. And if things don't work, point the finger. If they do work, he'll take credit. It makes it a very difficult one to understand the actions that go on. Cody says, do you believe that the bottom is in? I do not. Oliver, it was Autopia. That's what it was. Yep, Autopia. I don't think that the bottom is in personally. Now, Cody, we've talked about this on my program. I know that you're over from Don's channel, and welcome. Good to have you over here. You look at this chart right here of the S&P, and that sequence of lower lows and lower highs appears to have been broken right about this week. Last week to into this week, where we've just broken above this pivot high from April 10th. But we're not doing it with any conviction. You got a lot of volatility here, and I still believe that we have a lot of data, a lot of time before the actual effects of these tariffs, these macro global economic actions performed by Trump hit the bottom line. Many cases we feel that they're priced in. That's priced in, that's priced in. I do believe that a lot of it is priced in, but I also believe that the average person, and I would argue even top economists, don't know what the impact is going to be. We can all have our theories, our hypothesis about, if you put 25% tariff on Mexico for cars, that's going to impact this and this and this. Those are all expectations, right? We don't know. We haven't seen this dramatic of a trade war before. So I think that the uncertainty is going to persist. And uncertainty to me is the big negative word in the financial market. So I don't believe that the bottom is in. I think we're going to drift lower. I actually drew some pictures on the SPX. And I just did a kind of a rough sketch. So, Cody, don't think that this is set in stone. This is just my opinion based off what I've seen happen historically. And I go back to what happened in 2008. This is till the end of the year, right? So there's into 2026 would be the hard right edge of your chart. What I saw happen here is the same thing in the financial crisis, right? The markets came down to 20%, didn't close below it. As soon as it got below it, there was actions to push this market higher, and we bounced collectively because I believe group psychology, we moved to the upside. I think we'll start to stall out, and I think we're going to slowly start to drift back down, and the next time we drop below that 10% or 20% decline, which is 4,917 on the SPX, I think once we get to that, I think we'll get another little bounce. And then the big concern is if we close below 49.17, especially on that after the second bounce, then I think we'll see a bigger downside move and just drift lower and lower, because that 20% mark reflects fear. That reflects uncertainty. That's people going, oh crap, we're now in a bear market. Headline news will say bear market. 401k holders freak out and go to cash or go to money market funds, and that precipitates more selling. So that's just me and my hypothesis. Now again, I'm not here to sell anybody on it. That's just my opinion. Y'all can put your money where your mouth is, however you feel. If you think this is the bottom and you think that sky's the limit from here, great. We had a situation a year ago. Was that a year ago, Big Eb? It was back here. We had a similar picture, right? Let's look at this picture of the S&P 500. So we were here on the S&P 500 back in 2023 making a series of lower lows and lower highs trending down. And I'm a big believer of the trend in your friend is until the bend at the end. So I was anticipating this market continuing to go down, and I think it was Big Up and a couple others in my audience were going, I think we're going to bottom out here and have a huge rally. I don't remember exactly when it was, and I was still shorting when we broke the new lows, right? So I believed that we were going to go lower, and we did for a little bit, and then all of a sudden we broke that high, and we just really didn't look back. So yeah, I have and by the way, I lost money on that setup. You guys will remember that, and I'm public about my trades, and that certainly was a losing trade for me, trying to short. Not only did I short the breakdown, but as it rallied back up here to that 43.75 level, I was shorting again, playing that, and then it, continued to go and lost money. It's okay. I had stop losses in place, so it wasn't that bad. But, I'm a type of trader that I have my ideas, my plans, my hypothesis, but that doesn't mean they're always going to work. So, Cody, long-winded answer to your question. I don't personally believe that the bottom is in. Are we in an upward trend? Andre said, yeah, sure. I would argue it's a weak upward trend, right? It's a question of macro and micro. How do you view the market? And again, this is why in the past I've had a lot of guests on the program that represent different philosophies. For example, Bob Dunn, rest in peace. He was always about looking at the monthly candles. And that monthly picture looks very different than what you see here. What I see here is a shorter term, or maybe intermediate term downtrend, really starting in February, where we started to break lows and made lower highs and lower lows. Then all of a sudden, we started to see some change in that trend in mid-April, on April 21st, when we bottomed out on the 21st and started to move back up. We didn't make a new low. Therefore, more positive sentiment in the market. And now you have it making a new pivot high. So you could argue that on the very short-term trend, yeah, we have an uptrend, at least for the past, let's say 30 days, 28 days, somewhere in there. But if I switch this over to a monthly time frame, you would argue what? What would be your big argument for me right now? You'd be going, well, Merlin, we're in an uptrend. We're in an uptrend. This is just a pullback. And you would be totally correct. Absolutely correct. Again, what's your mindset? What's your time frame? This is why I mentioned that comment by Cody earlier. Don is probably looking out short-term days, just a couple of days worth of trading. Economic data doesn't impact that other than when the announcement comes out. But for people like many in here who are looking at, I need to build a plan for the next 6 months, maybe the next year, you're looking at a different time frame. And maybe it's not a monthly. Maybe you start off with the weeklies. You still have that same basic picture of, higher highs, higher lows. Granted, this pullback here has been rather severe, but I just don't believe that the bottom is in. I think that we've got more downside movement. And I guess what I would ask everyone to do just for themselves is on a piece of paper, you might be biased thinking it's going to be very bullish or it's going to be very bearish. Erase your beliefs on that and simply put out a piece of paper, and on one side of it put a plus column and the other half of the paper put a minus column. And I want you to write down for yourselves, not for me, but for yourself, what are all the reasons that you feel the markets would start to rally from here, right? What would cause an all-time high kind of movement, right? That ballistic move that sends us to all-time highs. And then write out the things that may cause this market to go lower. The factors that are persisting today or that may come into play over the next 3 to 6 months. What components could push it higher or could push it lower? And don't be opinionated, be objective. At the end of that, go through and see which one has more arguments for that upside or downside move. And then from my mind, I go through and I estimate the probability. Like, what's the likelihood of that? What's the likelihood of that? Is this how stagflation looks like? No, not yet. Not yet. Stagflation, remember, Robert, is GDP decline. So let's go to our GDP real quick since we're there. GDP declining. We can make that argument, right? Technically, to be a recession, we'd have to have 2 consecutive negative quarters of GDP. I'm going to say on record right now, I think that the next quarter's GDP is going to be -2, which will now put us in a position where the media is saying we are in a recession. We've had 2 negative quarters of GDP growth. Now, that's not officially determined. I forget the agency that officially determines whether we are in a recession, but the benchmark is 2 consecutive quarters of GDP negative. Well, we got one today. So we'll see if the next quarter gets us a negative number as well. So that's a bad sign. That certainly falls in line with what stagflation starts off with, declining GDP. What's the next piece that stagflation needs to be considered stagflation? Well, I'll go here and bring up the unemployment numbers. What you need there is rising unemployment. Okay, well, how do we look on the unemployment front? Here is a chart of the unemployment rate. Right now, we're stuck at 4.2, and expectations are that we're going to stay there. Now, is unemployment rising? The answer obviously is yes. You look at this chart, it is rising. But I make a, there you go, yeah, economic, yes, the NBER. I make the argument that while we're rising, I don't believe that this would qualify as a sharp increase in unemployment. In my opinion, and this is just my opinion, if we stay under 5% on unemployment, we're good. We are good. Ben Bernanke said 5.5%. I'll give him credit and go all the way down to 5%. So we're at 4.2. We got a long way to go before we go, uh-oh, unemployment's a problem. Is it rising? Technically, you could say yes. 3 months in a row, we've seen it go up. And now, the last piece of that is inflation. And there's your core PCE, which is right here. So based off those 3 pieces of information, Robert, stagflation would need to have declining GDP, check. Increasing unemployment, ooh, I'm hesitant to check, but okay. And you have to have increasing inflation. Nope, not even close, right? Inflation is dropping, and it dropped aggressively this last quarter. So not a worry yet, but again, 1-point data. If we get another month, and another month that shows consistently inflation is declining, then we can remove the stagflation argument for now. I still don't believe that this inflation is dropping like they are saying it is. I think the big challenge will come. If you look at this inflation data that showed 0 today on core PCE price index, I think that as soon as crude oil starts to pop to the upside, which I do think at some point will happen, it's just going to get so low that it's not worth the extraction cost. You know, if we get to a certain price where it's not going to go any lower, then the inflation data is not going to improve. It actually has a high probability of going the opposite direction. All right. Let's see. I had all kinds of things. Because Don got about the same thing going in the other way. Look back at the regular. Oh, I know. And that's fine. And you know what? It would be kind of funny to see how we go from here. But my guess is, knowing Don and knowing myself, we'll both probably do okay regardless of which way the market goes, right? Like, I believe the market's going to go down. It's just my hypothesis, my gut tells me we're going to drift lower. However, if it goes up, I'll still make money. I'll do okay. You know, from a profit perspective. You know, we were talking about this the other day, I think last Friday or something, where we're going through, you know, people's different rates of return for the year. And with the market down, I think when we did it, markets were down like 16%. You know, anybody who's got positive numbers in their account, you're winning. So if the market drops 20, 30% or rises 20 or 30%, as long as I'm above that number, I'm fine. I'm happy with it. Would you still call it a bear market rally? Yes, I would, Chris. I'd call this a bear market rally. It's tough because to me a bear market needs to be much bigger. But, you know, that kind of decline when you have a 20% drop in the market, that triggers your bear market sell-off. Granted, we didn't close below that 49.17 on the S&P, but here we are. Okay. Bob then also said, all crash from all-time highs. Following that, although we should go back to all-time highs and then crash. His comments was back to the thoughts. I'm not sure I understand that quite, Scott. I don't quite understand the comment there on Bob Dunn. But, you know, he was, in my world, the guy who was always thinking big picture. And especially with candles and trends, you know, looking at that, and he was good. Why is the Fed being criticized to reduce rates? Well, if you're President Trump, behind closed doors, I'm willing to bet you Trump's sitting around going, oh man, this market's really in a bad place. Shoot, man, I need to juice this. This is making me look bad. Or maybe he just doesn't care altogether. The pressure on Powell in the criticisms of Powell is because he should be cutting rates. Why? Because we need the economic growth. It will help out the economy. And Trump will use that as his platform to say, we need this to help America. Powell should be cutting rates to help America. But that's not what it's not a mandate to help America. Powell helps America by keeping jobs, full employment, and keeping inflation under control. And arguably, we go back to Bill Addis. What did Bill Addis say? He said that the Fed should do a victory lap. Fed should do a victory lap because they've done a great job. And it's hard for me to acknowledge and accept that, but have they brought inflation down significantly? Yes. Have they kept unemployment under control for quite some time? Granted, they came out of the pandemic. No one in here wants to be the guy that has to keep inflation under control and full employment during a pandemic. Brutal to try to do that. So, yeah, I think the Fed's done a good job, and the finger pointing will continue at Powell because the markets, JP Morgan, Jamie Dimon, Larry Fink, all your big financial firms want those rates cut to stimulate growth. Yeah, let's get economic growth. Powell's going, no, hold on. Trump needs short-term help with the economy. Correct. He needs short-term help, but he just needs any catalyst he can get to push the market higher. It will certainly help him. And if he cuts rates, that puts pressure on the long end of the yield curve, which may bring it down as well. I can say it may bring it down. It's not going to be a direct correlation. But typically when you lower that short end of the yield curve, the long end kind of drifts with it, and that would help the U.S. government out because as they issued new debt, they wouldn't have to pay as much interest. So there's a lot of reasons lower rates could seriously help President Trump. And I would agree that there may come a time when we need those rate cuts. Now, Jerome Powell is in a corner here because he should wait, he should hold. However, the economic data we saw today, which GDP is not part of his purview, but lowering rates will help with GDP growth. Lowering rates will also help reduce inflation, which we don't need to worry about anymore, at least for now. And lowering rates will certainly help with GDP. And that is going to be the talk track for the next month. At least 1 month will be, they better do it to save the GDP and help economic growth. Remember, that's not their mandate. But it would look good on Trump's resume and Powell's as well if a rate cut pushed this market higher. All right, what's Scott say? In his class, he said that crashes originate from all-time highs, of course. And we are not at all-time, not now. We backtested this into the 1990s and showed this to be true. This suggests that we'll go back to all-time highs before. Oh, so you're saying, I see what you're saying. You're saying that on this chart here, we should go and retest that all-time high and then come back down and crash from there. Well, certainly it's plausible. I'm not putting it outside the scope of possibility, right? Anybody. He's talking about Bob Dunn. Bob Dunn used to teach for Trading Academy. He had his own little school there. But Bob Dunn passed away. Heck, is it 2 years now? I think it was April 2 years ago. I'm pretty sure it was 2 years ago. Great guy. Wild. This is the guy that just didn't give a crap. He was awesome. If he didn't care who you were or what you were, he was just this short, stubborn guy. He was a bull in a china shop, but a great dude. I really love Bob Dunn. I miss that guy. He was so much fun. It's funny because Trading Academy used to have a conference every year where we brought in like 150 trading instructors and we'd build content and work together to make things better for the students. And I would always go out with the Chicago traders, the real Chicago traders, not Sam, but like real Chicago traders. Marty Dim, Craig Weil, Michael Young. Oh man, there's so many. But Bob Dunn certainly in that. Dan Sugar as well. There's a bunch in there. It was fun. It was awesome to be there. Anyway. Some things you just have to savor those memories and experiences, but Bob Dunn was a good one. So, yeah, Scott, maybe we do get up there. I just don't, in my list of things, I don't have a justification that will cause us to rally aggressively to all-time highs. Unless we get a clear, absolute resolution that has no ambiguity with regards to trade, tariffs, and maybe even get peace in the Russia, Ukraine, Middle East, to get all that stuff done, then yeah, markets could be ripping all-time highs. I just don't see it happening right now. He played hockey and traded the same. You know, I'm skipping stories here, but I'll tell you a funny one. He told me a story once. I guess I can say this without getting in trouble because he's not there anymore. But Bob talked about psychology so much. I'll tell you a couple Bob Dunn stories over the years, but one that I thought was really funny was, you know, on those trading floors, especially the aggressive ones back in the late 80s, you're talking hundreds of people pushing and shoving and elbowing for space. Like it was, you locked in your real estate on that pit. And it was like a concrete pit with these steps on the perimeter that you could stand on, and everybody had their own role and you all knew who everybody was. It was really, 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 really awesome. Sorry, Malcolm. It's well-deserved. It's well-deserved. Shade should be thrown at that guy. Actually, a lot more than shade should be thrown at that guy, but it is what it is. And he was telling me that one day, you know, he's a shorter guy, and there's giants in these pits, that he actually got knocked down and got trampled. And I don't know if he said he broke his back or had a serious back injury from being trampled in the pit. I just always pictured like the savageness of those pits. And fortunately, in the late 2000s? Actually, it was early 2000s. I was invited to go on the floor of the CME. And you have to have someone guide you, invite you on and bring you and show you around. And I was so fortunate to have someone escort me on the floor. It was really interesting because the S&P pit was still very active, but nowhere near what it was in the heyday. And one of the guys, I was just chatting with some of them, and he says, it's interesting the psychology that goes on in here. He goes, I sit on the outside of the pit. So imagine like this giant ring. In the middle is all these traders flashing signs on the perimeter, and stair stepped up where all the traders in their coats and those signs, all that stuff. And he goes, I wouldn't even go in the pit. I would stay on the outside and I could look at the backs of everybody. And he says, I knew who two big traders were, so I would stay right by them. And he said that as soon as you would see this one guy in particular raise up onto his tippy toes, he knew that the deal was going down, and that was a heavy hitter. You talk about psychology. He basically just sat there back and just watched some guy's feet all day. He wasn't watching the S&P. He wasn't watching the NASDAQ or oil prices. He just watched this guy's feet. And as soon as he went up on his tippy toes, he would jump in front of that guy's trades. And I thought that was pretty cool. Very, very cool. Yep, I'm sure Goldman has watched a lot. But, within those, I've heard so many crazy stories about Goldman Sachs back in the day. Today, Goldman Sachs does not have the clout that they used to have. All right. That's funny, Oliver. I like that. This is Sparta. No, it's so easy to get knocked down when you have a stampede of people. I mean, and just this undulating mob of aggressive people trying to get your attention to make deals with this guy to left and right. It's really a chaotic scene, and I miss it. I got involved with trading as that whole scene was kind of dying and went to electronic trading. And then a lot of those floor traders like Bob Dunn and Michael Young and Craig Weil, Marty Dim, Bill Henner, a lot of those guys went and tried to be screen-based traders. And a lot of traders failed. They just couldn't go from that psychological trading floor to a screen-based system, which I found very interesting. All right, let's move on from that topic. I went off on a tangent there. Real quick, let's just go look at the other saviors after hours. So we had the bad news start of the day with GDP. And I was like, oh, man, this is not good. Then the markets open, and 30 minutes in, we get this nice glory, hallelujah, inflation number. Markets rip. So the markets closed on a very nice note. And then we have two of our Magnificent Seven. That was going to be Meta reported earnings. Here's their numbers. They came out at $6.43 per share. They were supposed to make $5.28. That is an absolute crushing of numbers. Their revenue came out at $42.31 billion versus expectations of $41.4. So they beat on revenue, they beat on earnings per share, but more importantly, they spoke volumes and spoke very highly about the future. That their forecast was great. They're set the expectations of great things ahead for Meta. And of course, after hours, let's go take a peek at Meta. After hours, this is one for those of us who are long on technology right now. This is great. In the after hours, Meta is up 4.58%, drifting down a little bit right now, but it was up at that $580 mark, which if we zoom out, let's look what 580 represents, because I have it on that screen for a reason. That was your breaking point where we were bouncing along that 580 line as a demand zone, and then it broke. So right now we're sitting right underneath that 580 line, which I'd be using as a supply zone, right? A kind of a weakness point right there. And we'll see if we stall out and get some downside movement from that tomorrow. We'll be watching that on the open. Unfortunately, I'm teaching from 6 to 9 tomorrow morning, as well as on Friday. So my mornings are cut short from teaching. Now, the other side of this was Microsoft. And I just put a picture of cloud here because they really sided a lot with cloud storage and how that was one of their bigger market segments showing improvement. Microsoft was expected to make $3.22 per share. They came out at $3.46, a big beat there. And same thing on their revenue. People thought they were going to make $68.42 billion. It made $70.07 billion. So that is one of those major tech stocks, which of course we all know how big Microsoft is. Oops, I can't even type today. Microsoft, one of the most expensive companies in the world from a valuation perspective, in the after-hour session is up another 5.55%, closing at 417 right now. Now, as Margaret puts in here, says, my Apple is still going up. Look, there's a lot of tech firms. I mean, let's look at the NASDAQ futures right now. Now, obviously, Microsoft is a big component of that. So is Meta. So if we look at the 5-minute chart here of the NASDAQ futures, you'll see that from the moment that market closed, we had a nice move up. So let's see where we are from where the futures markets closed, 1 o'clock. We'll go from there. Right now, we're up another 1% in the after-hour session, just from those two. And as Oliver says, all tech should be up. Not all, but certainly this is going to be a big piece for tomorrow. As you guys know, I've got a lot of puts on NVIDIA that I sold at the 104 strike, so I'm happy with that. I've got other tech stuff, but MicroStrategy isn't really affected by this at all. It's all by itself. Big M says, Apple will screw everything up with its earnings tomorrow. Well, let's be honest. Does Microsoft and Meta, are they impacted heavily from trade tariffs with China? Right? That's really our big fight right now is with China. Microsoft and Meta, not that big, right? Yes, there is some exposure, but it's not like that's your major market. Now, you look tomorrow, and we've got Apple and Amazon, both of which could be seriously impacted by tariff wars, right? Amazon, the vendors that are using Amazon as a distribution channel in this US, whether those are direct drop shipping through China or people like myself that would go and buy, 170 e-bikes, have them shipped to the port of Los Angeles, put them in a warehouse and sell them directly here from the US, all of that is going to change. I think that it'll be very interesting. I think tomorrow's going to be a pretty good day. I think we'll have a nice bullish day. And I agree with Big Ab. I think Apple may upset this party a little bit. Now, let's be clear. Apple has already upset that party. If we go look at the Apple chart here, it was down pretty significantly since the beginning of the year. I will give you the lowest point. You're down almost 35%. So I think some of that may have been priced in. Since December 26th of last year, Microsoft is currently down 18%. So, this could be a pretty upsetting one for tomorrow. I hope that Amazon gets crushed. I'd love to see Amazon have like a 10% down day because then I would load the boat. Amazon at its lowest point was down 33.46. And right now, from that same peak that I just did with Apple, it is down 24.88% still. So Amazon is certainly showing some weakness. And Fury says the report, I had a chart yesterday. Unfortunately, I deleted that chart. Let me see if I can find it for you guys. This was a great chart showing that as well. Gosh, where did I put it? Yeah, here we go. 1 second as I bring this up for you guys. Yeah, Fury, this is the chart I brought up for you yesterday. This is from Yahoo, and this does speak volumes. You look over week, this is the scheduled container volumes year-over-year change. And in April, they saw an increase of 56%. And like I said yesterday, or on Monday, this is people scrambling to get as much as they can from China before the tariffs hit. And then all of a sudden, tariffs went into effect and things started to slow down. April 27th, we saw a 9% slide. May 4th, a 36% slide. Not good. And as of right now, the May 11th, container deliveries are down 0.63%. And we'll see if that number gets any worse. But yeah, this is a sign that reflects weakening business for Amazon for sure. And Apple certainly getting a lot of their tech from China, and that could be a big impact. So anyway, a lot of interesting stuff happening in the next couple of days. Minnow agreement signed with the U.S. and Ukraine. Good, but I don't know how comfortable I feel with that, Sava. Those things can change like that very, very quickly. Chris says, Tom Lee, Margaret rip your face off in 3 days. He stated Monday. Well, that's tomorrow. Look, Tom Lee, I don't know. I'm starting to lose credibility in Tom Lee. He's the guy that he'll never say anything negative about crypto. He's always just bullish on Bitcoin. I don't know, the fun strat. I don't know if I would say I hate him, Margaret. I don't have a lot of respect for him. I think he's almost like a Richard Kiyosaki guy. I mean, Richard Kiyosaki's been calling for an absolute market collapse for years now, and he hasn't gotten it. It's kind of like John O'Donnell. No offense, John, but John O'Donnell, he'll say, "Oh, market's going to crash. Market's going to crash." They are at some point. They will at some point crash. Just maybe not Thursday. And I think a lot of people will look at that and say, "Well, he's going to be right at some point," and he will. How old is John? I don't know. I think he's maybe 75. I hate to even say. I don't know. He's in his 70s, I'm pretty sure. Yeah, I meant to reach out to him. I forgot it was his birthday, so I'll reach out to him and see if I can get him on the show. I know you guys like having him on every now and again. Let me run in through the numbers real quick for the month, and then we'll go to some Q&A here. Let's talk about our March results. And I'll put these up on a monthly time frame just so we can see the monthly chart here, and zoom out a little bit on my chart so we don't look as cluttered. How are the Bitcoin miners doing in this market? Well, given the uncertainty and choppiness of Bitcoin, wouldn't imagine they're doing very well. Here's your monthly time frame. So, granted, a little bit different, but they're not doing that great. And this goes back to, let's say you look at the sell-off from November. This is Marathon. Here's Riot Blockchain, Hut 8. Oops. These don't look. Yeah, here's Hut 8. I mean, miners do not look good right now. At a certain point, they may become attractive, but I'm not that big on the miners. I'm not really that big on the miners. Marcus says, Saylor cannot move Bitcoin's price. True. I don't know if I would say that that's true. Certainly he could. Remember, Margaret, my big argument is Michael Saylor and MicroStrategy, I don't believe have direct control over their account. I don't believe they actually physically have their possession of their cryptocurrency. I believe it's held at an institution like Coinbase, like Fidelity, and they have custodians who are holding that Bitcoin for them. So technically, I don't think Michael Saylor could do anything. However, if he chose to withdraw all that Bitcoin at once, then these markets would go absolutely haywire. If he pulled it off of Coinbase and pulled it off of Fidelity and whoever else is his custodian, it would cause chaos in the crypto market. So he certainly could have an impact. But as far as him buying, yeah, he buys $1 billion and the market doesn't even move. And again, it's because I don't think he's actually buying Bitcoin. Is Saylor the only decision maker at MicroStrategy? No, there's a board, but he's the chairman of the board. He's the CEO, so he's going to make most of the decisions. I mean, look, when you're a Bitcoin treasury, you don't need a lot of employees. I have a feeling that if you worked at MicroStrategy, you should be nervous about your job because they claim to be a technology company, but what do they really do? No one's using MicroStrategy for technical services. It's now just a Bitcoin treasury. So you just need a few people to keep track of the numbers, and that's it. So I would imagine I would be putting people in place where I got to be my own market maker. Let's see, what else we got? He's only good at selling books. How do you protect your devices when traveling in other countries? Jimmy, are you asking like my laptop and cell phones and things like that? VPNs are a great way, especially when I'm connecting to internet cafes. I use VPNs all the time. I mentioned I used to use NordVPN, but remember when we had the very attractive young lady who was the privacy girl, Naomi Brockwell. Naomi Brockwell, she introduced me to a couple different sites. And for those of you who are interested in privacy and concerns, do a search on my YouTube channel for Naomi Brockwell. She did a great thing, a great presentation, not a presentation, we had a great discussion on privacy concerns, how to protect yourself. And she introduced me to a VPN called Mulvad, M-U-L-V-A-D. And I now use Mulvad. And her reason was NordVPN still keeps track of everything that you've done. So they could theoretically sell that database. Mulvad is decentralized, doesn't keep a copy of anything, and therefore much more private. That to me is very, very, very important. I should have her back on. Yeah, I need to be very structured about what to ask her about, but she was great. Very smart, very smart. And, in this day and age, our privacy is data. Our privacy is information, and our privacy is money. And businesses like Google and Microsoft, Amazon, they utilize that to their advantage. Why can't we use it to ours? I wish that if I was... I don't usually wear a lot of logos on my clothes, but if I did, I wish that I was getting a check from that business to wear their logo. If someone's going to use my data, I should receive a check. And I think I'd feel much better about it if Google, which I use a lot, would send me a check for like $5,000 a year. Even though they made, $50,000 off of my data, send me a 10% cut. I'm all right with that. Show me the money. Give it to me. Anyway. She introduced that website that can check to see if your email was or is not compromised. Yeah, it was a really good show, especially for those of you who have not seen it. Go for it. She did talk about Surfshark, I believe, Tofi, and her concerns were that any VPN company can keep track of all of your traffic, and a lot of them are doing that. But the one that she mentioned, she said Mulvad does not. She's interviewed the people from Mulvad before, and they're like, we have no interest in where you go, what you do. You just pay us, and that's all we care about. We're not selling data at all. To me, that's pretty big. How can you really know that they're not keeping your data if they say they're not? Good point. And it's a great point, Mike. I don't know, but as a VPN, you're building your reputation on that privacy part. So if it ever leaked out that you did leak the information, you would lose all your customers. I know I would leave. There's website browsers like DuckDuckGo and Brave that don't track either, but is there a real way to audit it? Let's ask Brett Johnson. I'd love to get Brett Johnson on this program. He's great. Brett Johnson is phenomenal. Pasky says, do you expect Bitcoin to fall the same down as stocks? No, I don't. Now, how much time do I got? All right, we can finish this. I don't want to be like hypocritical, but I've been very open about my opinions of Bitcoin, and I have thought we would be higher than where we are today. I thought we'd probably be about 130, 140 as of today. We're not, and it leaves me scratching my head a little bit and wondering what could be the cause of that. I do have my theories, which, Pasky, I won't get into right now. I've talked about it on this program in the past, but I just don't have enough time today. Maybe in the future I'll do a dedicated show on that. But I do believe that now we're starting to see more positive sentiment come into Bitcoin, which leads me to believe we will get corporate investment, we will get institutional investment, we are going to see better regulation, and we'll see probably within the next 6 months the Bitcoin Strategic Reserve Plan by, I have absolutely just, my brain's not working today, by Senator Loomis, which she's had on the plate for a while, will get approved, and then we'll start actually buying Bitcoin with some reserves that we have here in the U.S., and that will drive price higher. So I think we've turned the corner. I actually put a yellow box here a while back. I think, where was it? Let's go back to the Bitcoin price chart itself. So I wrote this down here. I said, we'll never hit this level again. And when we were back here, I said, we'll never hit this level again. And I was wrong. On March 14th, we actually came back down and we hit that level 2 days, out of 3 days here on April. And now I don't think we'll ever break that level. Maybe I should write that, but break this level. I think we'll see this. I think we'll see it stall around this 96,000 mark, maybe drift down to about 88, 89,000, and then continue to start to move up. You know, you have a lot of other new participants talking about creating a Bitcoin treasury just like MicroStrategy. There's 21 Coins, which is run by Jack Mallers, who is backed by SoftBank and other big heavy hitters that are looking to buy billions of dollars worth of Bitcoin in the same manner as Michael Saylor, and there's other companies as well. So I think that demand far outweighs supply coming into the marketplace, and therefore I think it's going to go higher. All right, let me go to my top 10 here. I was starting there, and I want to make sure I wrap up and get you your economic announcements for tomorrow. Here's your 1 month chart. I'll start at the bottom and work our way to the top. Crude oil, brutal. Down 18.48% for crude oil. So let's pick on that one right there. Crude oil down 3.6% today. If we go from where that where we saw this month begin to where we ended, yeah, that's where we are at. We're down 18.48%. This line can go away. Just for the month. Not great, and that trend does not look good on a monthly basis, right? It looks pretty darn bad there for crude oil. Now, your next victim, and there's a lot of victims this month, is the dollar index. Now, this should theoretically be good for the equity markets. A weaker dollar helps, and there's your monthly chart. Brutal. This is 3 months in a row. We were up at 110 on the dollar. Now we are down at sub 100. That's a 10% decline in 3 months on the purchasing power of the dollar. That should help U.S. businesses from an export perspective. So this should help the economy by having this weaker dollar. This is what Scott Bessent wanted. So does Donald Trump. They want a weak dollar. And right now, we've bottomed out at this demand zone I've got mapped out down here between 97,070 and 98,030. After that, you got a long way to go until I see anything that's really significant. That's probably down around that sub 94 mark. Let's hope we don't get there. Next victim, 4.35% slide for the dollar index for the month of, what do I have, March on there? Merlin, update your stuff. All right, let me fix this real quick because I look stupid with that number on the screen there. We're going to go into April. April results. Okay, next victim, Russell 2000, down 2.32% for the month. This is that canary in the coal mine, and I'll tell you, even though you're down 2.32% for the month, this is a great month. At one point, this Russell was down 15.69%, and now it rallied all the way back up, and it says 2.83 here. When I pulled these numbers, I was using the ETFs because I didn't want to count the after-hour session today, which was moving to the upside. So not bad, considering. The main victim was Jay Powell. You know, he was certainly helping some of these moves. We jumped to that 10-year bond yield, down 1.07%. Now, really, I think the big moves have been recent. What's noteworthy here is how wide of a range we have on the 10-year bond for the month. That is a huge range. We've gone from 4.6% to 3.9%. That's 70 basis points on the 10-year bond in 1 month. That is crazy. Even Bill Addis would go, man, that's wild. Wild. Next, the S&P 500. Still negative, down 0.87% for the S&P. Here is your chart of the S&P. You know, even though I say it's negative, I do want you to understand where we were. At one point, we were down 14.53% for the month. That is a terrible month. And at the end of it all, you know, just barely negative. Roughly 1% on that S&P for the month. So I say this is actually pretty darn good from a momentum perspective. It does look like upside movement. So I don't know if Cody's still here, but it does look like because of the hammer formation here that buying pressure came in near the end. It does lead me to believe that from that candle formation, that prices might move higher. NASDAQ 100, we jump into positive territory thanks to some of the tech plays here that bounced back here recently. You guys can see the same picture. We had this really ugly negative candle form. At one point, we were down 15.33% on the NASDAQ, and by the end of the month, we're up over 1%. So great retracement and move for the NASDAQ. Oh, I didn't show you the chart. There you go. There's the chart. Sorry, Big Eb. I'm going too fast here between my 3 screens, but there's your chart, and it should pop up on you guys right now. There it is. And last but not least, because we have, or second to last, gold. No problem. Thank you for mentioning. I forgot to pay attention. Up 5.33%. That's, I think, just reflects the uncertainty. We've talked about gold as being that flight to security. I still think that holds true. At one point, gold was up 11.41%, finishing only up 5.36%. So that's on the future side of things in the after-hour session right now. All in all, gold looks great. Gold looks absolutely fantastic. But wait, there's more. Fortunately for me and some of you, the victor for the month of April was actually Bitcoin. 15.11% move to the upside. Here's your Bitcoin futures chart. It looks the exact same as last month's candle. So if you take March and you look at April, they're almost identical, just opposite colors, right? Even the tails are almost the same length. So this is a pretty positive sign that we've erased all of that negativity from the month of March. Really, for me, it's about seeing what happens in this month of May, right? How does May shape up? Do we get some more positive sentiment? I think that May will be the month that we get back to these highs. I think we'll be back up to the all-time high on Bitcoin by the end of May. I think momentum is going to jump in here and really start to rip. So there's your top 8 markets that we cover here for April. Wide swings, really wide swings. I mean, just crazy. Crude oil and Bitcoin really having exact opposite numbers here, but massive swings. I mean, 15% in a month is absolutely incredible. Chad says, how's your silver? I have no silver. I have physical silver, but I don't have SLV. You could almost call that a Harami formation, even though the tail is so long there. Yeah, I don't have any SLV shares right now. I thought about selling some puts and building some SLV in my portfolio, but now just got the silver bars and silver coins. That's it for me. If you look at the daily here, silver has had a pretty significant rally off of those lows. I mean, just in 12 days, it rallied 15%. That's pretty darn good. Close that gap here. Well, I call it closing that gap. Close enough. But what do you think of the weekly shooting star for gold futures? Well, if we go to a weekly shooting star, let's get rid of that line there. Yeah, let's put that one up. So let's play that level, and I'm deleting a bunch of lines here because I want to put that line right below it. But what Margaret's pointing out is last week's shooting star. What do I think about it? I still think it absolutely is in play. And Margaret, it goes back to what are my rules? My rules are it's got to open up above it, which it has. And now I would say if you get a break down below 3270, short gold. The challenge is you're shorting one of the strongest markets. That's tough to do. Shorting one of the strongest markets is a very, very difficult thing to do. So be careful with that one if you are. All right, let's go to my last little part here. Talk about your economic calendar for tomorrow. I know you guys keep, now you always ask me the great questions in the last 5 minutes of the show. Let's go look at our manana calendar. So the 1st of May, here we go. The 1st of May, we do have some I guess, decent information. We've got jobs data. You have the unemployment claims coming out. You have ISM manufacturing PMI as well as prices. You've got construction spending, natural gas storage, vehicle sales. A lot of economic data coming out for the U.S. And actually later tonight, if you are trading the Japanese yen, boom, 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 you have a rate announcement happening sometime this evening. I believe that should happen in about 4 to 5 hours is they'll come out with their rate announcement. Expectations are they're going to stay the same at 0.5%. They have for the past 2 meetings. They stayed at 50 basis points. We'll see how that goes and what the numbers are. And certainly if you're trading the Japanese yen, which has been a wild ride here recently to the upside, this is your weekly of the Japanese yen. That's the dollar versus the Japanese yen. So dollar losing a tremendous amount of purchasing power against the yen, which means that Japanese yen is surging to the upside. That was your economic calendar. Earnings, it's not done. We had Microsoft and Meta today, which will certainly dictate how the markets start tomorrow. But as we have talked about here already today, you notice we've got Apple, $3.1 trillion market cap, reporting earnings after market close tomorrow. That one, boy, it could be an absolute market wrecker. It really could be. That, again, I'll have to throw the popcorn on the screen here for your popcorn trade of the day, but that's your popcorn trade of the day. You also have Amazon. You know, they're almost a $2 trillion market cap, but you've got Eli Lilly, MasterCard, McDonald's, Amgen, and several other big names reporting earnings after market close tomorrow. So should be a pretty wild ride. I'm excited for it. I really wish I didn't have to teach this in the morning from 6 to 9 for the next 2 days, but it is what it is. I really love my class and my students out there, so I'll have fun. I just want to get to trade the open there. So thank you guys so much. You guys had some great questions from us because you stimulate our brains. Good. That's the whole point of this, right? Get you thinking. Get you thinking about how these markets function and all that other stuff. So that's going to do it for me, everybody. Actually, Les, gosh, do I have time? I have time. Les says, if everyone is boycotting our products around the world, does it matter what the value of the dollar is? Well, it's not. I wouldn't say everyone's boycotting. They're certainly going to boycott some stuff. Does it matter what the value of our dollar is? I still think yes. I still think the bigger picture is the dollar does matter. So, all right, guys, that's going to do it for me. Really early for me. No, Big Gab. I've got 60 seconds left. Oh, you mean for the class? Yeah, it is. All right, that's going to do it. You guys have comments, questions, feedback, things you want to know, hit that subscribe button, like button, or email me at tradermerlin@gmail.com. And for those of you who are new and joining us for the first time today, welcome. We'll see you guys tomorrow. Take care.